a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about defense stocks and ETFs that are surging in the new year following the US move over the weekend to oust and capture Venezuelan leader Nicolas Maduro. And in fact, these stocks and ETFs had done quite well last year as well. This sector was one of the best performing sector last year, one of the best performing sectors. And now President Trump has revived the Monroe Doctrine of the 1820s, which emphasizes the need for American dominance in the Western Hemisphere. He has also referenced Colombia, Cuba in recent remarks, and he has also said that we need Greenland from the standpoint of national security. So, experts are concerned that these actions could also embolden China to move and Taiwan and also encourage more aggressive posturing from Russia. We have seen that tensions between China and Taiwan have been rising. They have been rising between India and Pakistan, and there are ongoing conflicts across the Middle East. So, all this is already driving a renewed global focus on rearmament, and that has the potential to push military spending even higher. In fact, according to Global X, global defense spending could surpass $3.6 trillion dollars by 2030, and that is up 33% from 2024 levels. And countries are particularly accelerating their investments in global defense technology, particularly investment in AI, autonomous drones, advanced cyber defenses. And in the US, in fact, increasing defense spending is one of the very few areas that the two parties agree on. So, shares of US defense contractors, including Lockheed Martin, Northrop Grumman, L3 Harris Technologies, General Dynamics, they have done quite well, supported by higher defense budgets. But European defense stocks, Rheinmetall, BAE Systems, Leonardo, they have done even better. And these stocks have been rising since the start of Russia Ukraine war, and they surged further in 2025 because the European governments, ramped up military spending, partially in response to pressure from President Trump. Now, these stocks, which had done so well last year, they retreated a little bit late last year when there were signs of progress toward ending the war in Ukraine. Then not much happened, and they started their uptrend again. Now, these many of these ETFs invest in defense as well as aerospace stocks. So, talking about aerospace, global air traffic continues to rise, particularly with rising middle class and emerging economies, and that could be a key driver for future travel demand, and that should provide support for commercial aerospace over the long term. Now, let's take a look at four ETFs that are quite different from one another. So, iShares US Aerospace and Defense ETF, ticker symbol ITA. This is the largest product in the space. This focuses on domestic aerospace and defense stocks, is market cap weighted with an expense ratio of 38 basis points and assets of 13.5 billion under management. If you want to learn more about this ETF, you can go to the code page on Zacks.com, read our articles, research report. Using the link, you can go to iShares webpage for this ETF. You can learn more about what this does and what this holds. So, since this is market cap weighted, this ETF is quite heavy. GE Aerospace accounts for almost 22% of the portfolio. And then you have companies like RTX, Boeing, Northrop Grumman, Lockheed Martin, etc. Now, if you are worried about top heaviness of this ETF, you can look at an equal weighted ETF. This is also quite popular, also focuses on domestic aerospace and defense stocks and follows an equal weighting scheme. This is one of the cheapest in the space, 35 basis points expense ratio, also quite popular, 4.9 billion in assets. And again, you can go to the quote page on Zacks.com, and from there, the State Street webpage for this ETF, and you can learn more about this ETF. Also, look at the holdings. So, you will see similar companies like Boeing, General Electric, etc., but in equal weights. But if you look at the top holdings currently, you will see space companies, Rocket Lab, Kármán Holdings. Now, space companies had skyrocketed last year, so obviously these stocks are currently the top holding in the ETF. But at the time of rebalancing, all these will be brought back to equal weights. Now, let's take a look at the two which are further different from these two ETFs. So, this product by Global X focuses on defense technology stocks, and this is one of the top performers in the space. This also has a market cap weighting scheme and 5.2 billion in assets, charges 50 basis points. Again, you can go to the quote page on Zacks.com. I also did a podcast with Global X and talked about this ETF recently. You can listen to that podcast. You can read Global X's research. They have some good insights. Looking at the holdings, you will see Lockheed Martin, RTX, and also companies like Palantir Technologies, which have done quite well. And this focuses on international stocks as well. This is a European defense contractor which has done quite well. Rheinmetall, and in fact, if you look at the country exposure, US accounts for 61% of the portfolio, and then there is exposure to German, British, South Korean, and other defense companies. Now, the last one that I'm highlighting focuses on European aerospace and defense stocks. The ticker symbol is EUAD. Similar expense ratio, 1.1 billion in AUM. And again, you can go to the quote page on Zacks.com and learn more about this ETF. And in fact, I had done a podcast with Matt Tuttle, who runs this ETF, and you can listen to that podcast. Also, look at the holdings. You will see different holdings in this ETF because it focuses only on European defense, aerospace, and defense stocks. So, the top holding is Airbus, about 19% of the portfolio. Rolls-Royce, Safran, Rheinmetall, which I mentioned is one of the best performers in the space, BAE Systems, etc., the holdings in this ETF. On the next slide, I have the comparative performance. So, Global X product, Shield, and EUAD, the one which focuses on European defense stocks, they have surged about 87-88% over the past 12 months. And the two which focus on domestic aerospace and defense stocks, ITA and XAR, they have also done quite well, up 57-58% over the past 12 months. And the S&P 500 index is up about 19% over this period. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Make sure to subscribe so that you do not miss any of our videos. And I will see you next week.